Good morning, everyone. Today is Monday, March 13th. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. Going to be a little bit of a short one today. I'm only going to cover the ES. I want us to see what's actually happening. If you're on Thinkorswim, they have already rolled to the M contract. Many of the other platforms are still sitting in the H contract, which is a little bit bizarre to me, but whatever. The key thing to sit back and consider is the following. We've got a lot of fear mongering. The big concern is that bank deposits, which are getting moved, right? I mean, if I'm getting zero in my savings account and I've got a hunk of cash in there, I'm going to move it out into a money market or some other kind of closed fund that's going to give me a better interest rate, or I'm going to buy a 2-year treasury, which is what I have been doing. And I've got to tell you something. If you're looking to the bond traders right now in terms of what to do, they don't have a freaking clue. And the reason that we can look at that is because they have failed to hold steady the course. If you look at the Fed funds futures rates, those things move hundreds of pips in the overnight. If you are firm in your thought process about what's going to happen, you're not doing that. And what's happening is they're just being shredded by news and media. And so we've gone in just 2 days from anticipating a 50 basis point rate hike to a 50 point basis rate cut. They don't know what's going on. So we're going to watch price. Here's what's happened. We're in a very big tight range. That tight range is giving us a floor. Remember, I say look at the current candle and the 2 candles prior to figure out what's going on. Here, we dip just below the low of that, and then we immediately began to buy. So who do you think's buying? Listen, folks, good money managers, they don't get swished around by the ebb and flow. They look at the big picture formations in terms of the accumulation of a portfolio, and they are going to buy the dip. What's happening is that on Friday, the VIX moved really high, up above 30. And so that means a bunch of people have bought puts. And so they like to make their money. So they are shoving the market down. And then as soon as the market opens up, that's going to really tell the tale, where they're going to make their money or they immediately are going to have to buy to cover. Okay, so what are we looking at? Here's the low of last week. Here's the high of last week. It's huge. It's an outside candle, right? For those of us that trade the strat, we know it's a 3, right? So 3s tell us in this broadening formation what's likely to happen. What do I think? I still think bounces are going to sell because people are afraid. And when people are afraid, things are going to move down. But what we have to watch for is the failure to continue down. And this was the first start of it at 38.15. So that's going to be that floor. The bounce at 38.30 still bringing sellers, right? But they could easily hold that. 38.46 to 38.50 going to be that resistance zone. Remember, we're looking at the the H contract here this week. So if you're on Thinkorswim, these numbers don't look the same because they've already rolled over to the M contract. I'm going to trade the M today, so my numbers in the room are going to be based on the M, but this is what's happening. Look to these levels and watch for the bounce. The traders, if they hold this region, listen, we're coming into the market this morning with a negative delta. Hang on, let me see what my actual delta is. We have a cumulative delta. Wow, it's barely 0. So this is going to be a super interesting morning. What does that mean? You better be quick or you're going to be dead, right? This is gunslinger mode and sniper rifle all the way. You've got to be careful. Here's the thing. If you want to see what's going on, go to your, I hate going lower, 15 minutes. That's the lowest, right? And start looking at these things and go, wait, am I failing to head lower? Well, this is the first candle since this one. So what does that mean? If we look at these 2 guys and we go, well, that is certainly that level. Let me clear this. All right, so let's take a look at this one. Also, let's get these properties in here. All time frames. Okay. And we're going to see clearly this is the floor. We can see, hey, it's pretty much the floor of last week. Traders are going to try to get there, but if they can't stay above, it's still a selling zone, okay? So very much downward formations. Anything higher is going to confirm these very big downward formations. And so what you have to anticipate is the bounce into the close of your prior candlestick that does not break higher is going to head lower until the price action shifts. Let the traders duke it out, the ones with deep pockets and big money and tons on the line. Let them break themselves into pieces doing whatever, and we can get in after the fact. Right now, every single bounce is a sell zone. You've got to be careful, but what you want to watch is, am I holding the low of 2 months ago? Well, 3 months ago, right? And that low is 38.1450. And that's what we're going to look for, right? 38.1450. You can replicate all of this on any chart that you watch and realize that this is a very big zone. People are going to try and hold it. If they can't hold it, folks, we're going to the next ledge lower. That's just how it works. It is just how it works. I suspect traders are going to start buying, but I can't go long until a floor has been confirmed. All right? Now, you can go to a 5 minute and get a floor, but you're going to have to be quick or dead. Stay frosty, and I'll see you all tomorrow.